Welcome, ladies and gentlemen. Today is the 28th of March 2021. In this video I would like to comment on the whole case regarding GameStop. The stock is now trading at $181. Yeah, first of all, I don't think there's a need to explain everything again. There are many videos out here which explain the basics regarding the case. So to make a long story short, we had retail traders teaming up via a forum called Wall Street Bets, which is a subreddit on the Reddit internet forum. It's publicly available. That's very important to understand, so everyone can see that. So what happened is, traders there, they selected certain stocks such as GameStop and Nokia, etc., and they all bought the stock, and consequently it increased. Now I should explain that on the other side of the trade we had hedge funds such as Melvin Capital trying to short those stocks and trying to benefit from those stocks going down, and therefore the retail traders, by buying those stocks, were forcing those kind of positions into a short squeeze. So I would like to say a few things about all that, and before I come to this, what happened then is, after we had the initial increase in the price, many brokers such as Robinhood, which were used to trade GameStop by the retail traders, suddenly suspended trading for some time in those stocks. So in other words, people were not able to buy more of those, and therefore the stocks came off again. And yeah, so let me give a bit of a personal opinion regarding this case. First of all, it's just awesome to see, that retail traders are able to team up, to buy and hold a stock and to counter those entities which normally dominate the markets. I'm not saying necessarily that specifically Melvin Capital has engaged a lot into questionable trading or anything. However, it is very well known that there are hedge funds who short the stock, and in order to increase their odds, they engage in unethical, if not illegal, practices, such as spreading negative rumors about a company, etc., hoping that the stock price will decrease as a result, so that their short positions get into profit and then can get out. This is just one single example of many tricks which are unfortunately implemented in the financial markets. And again, as you know, my personal work concentrates on the forex market manipulation, which I've exposed since a few years now. But now it's also time to look a bit at other markets, such as here the stock markets. There is this infamous video of Jim Cramer, where he explains how he, with his rather small hedge fund, was able to engage in market manipulation, to place fake orders in the market, etc. And there are many things which are done out there. But to give you just one specific example, and this is relevant here. If certain hedge funds have short positions in a stock and they want to push the price down and to benefit from the demise, look, it's perfectly fine if there are other market participants going the opposite way. And in this case here, for retail traders who talk in a public forum, and to buy and hold, and many of those did not even trade for profit. That's also important to understand. When the price started to go down after the first suspension of trading by the brokers, people said, look, we're not selling. When the price afterwards went up again, people said, you know what, we're not selling, we will not profit. Some of those people even said, you know what, we are making a point here, this is not about profit, we will not cash in, we just buy and hold the thing to the end. And I have to say, I really respect that, because that's great, because at the end of the day, even if this whole case, even if the stock goes down in the end, and even if the company will not be successful, etc., it's fantastic that people made that point, that we cannot have financial markets where the rules are unfair. Okay, to make a very simple point. And this is exactly what's going on a day-by-day basis. And we live in a time now where we need a democratization of financial markets. Okay, we need a more level, even playing field, a level playing field. And this is exactly what's going on. And this is a fantastic case which shows you that times have changed. Okay, we don't live in those times anymore where some hedge funds live in the ivory towers and are able to push prices around and to team up on certain stocks and to do what they like just because they have deep pockets. We live in a different time now with the internet, with people communicating around the world, people having access to brokers around the world, access to information. Okay, and that's beautiful because look, in the topic of true alpha in hedge funds, true alpha, so uncorrelated market return, which was created by unique analysis, unique decisions, etc., is quite controversial. A lot of hedge funds either are correlated to the market, or if they outperform, they engage in questionable practices. Okay, I'm not saying that this is always the case, definitely not. They're just some great hedge funds which are good at what they do, no. But it does exist, and it shouldn't exist. And I hope, that things will change and the regulators wake up. Now, allow me to explain. This whole case reminded me a bit of certain cases we have also seen in Forex. For example, arbitrage, Sometimes when brokers misprice certain currencies, people were able to exploit that by trading the other way and to actually profit from the mispricing. Now, there were cases where, after this was detected, people were actually forced to pay back their profits. Then there were other cases where clients had a stop and the market completely moved the other way and the stop was not filled by the broker and the client suffered a loss. Then there were even cases of complete broker default where the broker went down and clients lost all their funds, such also as Alpari and other cases. What I'm saying is all those cases show you that in reality it's often the big guys, such as the brokers, who win an unfair game, and it's most of the time the little guys, the retail traders, who end up losing. And that shouldn't be the case, as simple as that, okay? Because a golden rule of financial markets should be that if I click a button, I buy or sell, and I take the risk that, there may be loss or profit, it can't be that, when everything is against me, I lose, and in another case where I was on the right side, I suddenly lose again, just because there are questionable practices going on. So what I'm saying is, when it comes to, for example, the case of Forex arbitrage traders back then, years ago, well, they didn't have a guarantee that the trade may work. Okay, maybe it wouldn't have worked. So they took the risk that it would not have worked. And I see the same with the GameStop case. There was no guarantee whatsoever that people who bought together and talked to each other via this internet forum, that the price would actually go up in the end. There was no guarantee whatsoever. These people took the risk, and many of them continue to still take the risk. So it's completely wrong if, despite people took the risk and made an investment decision or trading decision, they are not allowed, to have the respective exposure. Okay, so this all brings us to the same topic. Okay, the fact is, the regulators, they should have some self-awareness, because it looks like they are going often for the little guys, but they're not really protecting the little guys, and they don't dare to go after the big guys. Okay. And that's wrong. It shouldn't be that way. Okay, regulators should protect little traders from unfair practices. Now, when it comes to the suspension of trading in the case of GME, that's wrong. Because regulators need to investigate that particular case. I'm not saying that something was done intentionally wrong, but if it was, if there was a conflict of interest, if hedge funds which actually owned Robinhood, so the broker, told the broker to suspend trading in any way, so that maybe hedge funds who were short could get out of their short positions when the price dropped and not get squeezed any further. If that was the case, there need to be consequences. As simple as that. Okay? This needs to be investigated. And I'm not saying it's a case, but if it is, there needs to be consequences. If regulators are not able to conduct an efficient investigation in such a simple case, then we have the same thing like we always have. The big guys just, get away with, unfair practices, and the smaller guys are affected by that. And that's wrong. And what we can see is that now, with more and more information being available, there's less and less exclusivity, okay? And that started a few years ago when people in investment banks were afraid that actually they don't have more information than people out there who, are able to research and have access to the internet all day in different sources. Of course, in the worst case, hedge funds and investment banks are exploiting insider information in stocks, and that's illegal. And there have been many cases where people have been prosecuted for trading on insider information. But even regarding that particular topic, there's another area where there's quite a fine line, a gray zone, where hedge funds may have, let's say, not insider information, but more exclusive access. I mean, to make a long story short, if a hedge fund manager has a great network and he just calls up, managers and CEOs of the companies he will buy or sell, and he gets a direct, summary of, what's going on, whether the company is doing well or not, despite what the last numbers in the report were. I'm not saying that this automatically represents insider information. It may just a normal check for information, which is fine. But there can be a little advantage for such managers regarding their own trading decisions. However, these advantages will disappear more and more in the future, obviously, because today it's different. We have there's no exclusivity when it comes to information. You can do your research, you can have access to all kinds of information sources. So these things will be part of the past at some point. So to conclude all this, we need financial markets that are fair, okay? It's not acceptable when there are any kind of conflicts of interest, like there potentially with the broker and funds owning the broker, okay? And then hedge funds trying to short a stock and facing a lot of retail buying power, and then, trying to get out of their shorts. This needs to be investigated. Okay, in the future, I hope the regulators will be more aware when it comes to potential unethical practices by funds who, for example, short stocks and try to spread negative information, even though this information is not true. There need to be guidelines and rules and laws, okay, regulating all that. Because what's happening otherwise is we will have different entities, engaging into spreading all kinds of information, even via those internet forums. We will have entities who have interests and conflicts of interest and will try to spread certain types of information. So, to make a long story short, amazing case, okay? I respect everyone who took part in this. I personally missed that one. But I think it's fantastic what happened there. It's amazing to see that actually it's possible that if retail traders around the world team up, they have a chance against certain entities in stocks. Okay, don't forget that. In Forex that wouldn't work. And you know why. So, yeah, I love that. It's great to see that. It's great that this continues. Obviously, regarding the future developments, nobody knows. Will GameStop be pushed up further? It's possible. Because, one scenario is, because of all that increase in the price, in theory, GameStop should have the chance now to raise capital and to actually expand into other business models. They could go far beyond just renting out old games. So that's really funny, because that would mean that the company fundamentally actually had a chance to reinvent itself because of all that would happen. That would be great. Let's see what happens. I don't know. It's difficult to say. It could also be that, you know, the stock price goes down at some point, and you know, it really depends on whether I think it depends on whether management is quick and will use that particular chance which has presented itself right now. But you know, still, it can't be that we have this kind of manipulation going on, and it can't be that regulators are not able, okay, to intervene. And it's just not fair, okay, if a broker, maybe without wanting it, you know, facilitates one side over the other. Again, the golden rules of trading are that, you know, market participants take positions, opposing positions, they buy or they sell, and the overall outcome should not be influenced by you know, management decisions such as we suspend trading for some time, you know, in order to you know, prevent this from going out of control. But that's very problematic. So it's great that people start to think about this big question: why do financial markets the way they do? Why does the stock actually go up or down? And this particular case shows that people are looking at those questions. Stocks going up or down have a big impact on the shift of wealth, okay, on income, on the wealth gap in society. So these are very relevant questions. And it's fantastic that, you know, people even teamed up to take the opposite side of some smaller entities who think they have, you know, the upper hand. Beautiful. That really makes my day. Yeah. So, considering those kind of cases, considering that the overall stock market, as I've shown in this last overview video, is really inflated because of central bank manipulation, you know, we need to really look at the fundamentals of financial markets. Also looking at, you know, crypto markets coming up and all that. So we have all these things going on. Things are changing, and I think they will change for the better. And that motivates me. And again, when it comes to Forex, we have the game of the smart money versus the dumb money going on. I show that a lot, and I will continue showing this. So stay safe, know in what kind of markets you are actually engaging, what the rules are, how these markets actually work, because you can see there are different types of manipulation across the board. It's not all the same, you know, and be aware that these things are happening and try to avoid, you know, falling victim to this. Stay safe.